But I do want to start today with a quick rundown of kind of what's happening. We've been talking for weeks about the expectation of just really ugly numbers, and we weren't disappointed in that. This last week, we got the payrolls fell by 20.5 million people in April, pushing unemployment to about 14.7%. That's the highest since data has been recorded, since it started recording in 1948. That's the highest number we've ever seen of unemployment in the United States. So leisure and hospitality industries have taken the brunt. So there's 47% fewer people working in leisure and hospitality today than there were in February. That's 7.7 million people have lost their jobs in that particular industry. Most other industries have been largely protected, meaning the next industry lost 10% of their employees. So there's a lot of damage, and this is what it is to be on the front end of the U of economic decline and recovery. And I think that there was some thought early on that we would have more of a V, and I just have always kind of thought that we'd have a little bit of decline here, big decline, and we'd have to wait until people are more okay with being out and about and more okay with going out and doing things. And I think it's a long time before we're going to see people at sporting events or at theaters packed with people. I just don't see it happening anytime soon. So, but this is expected. This isn't a surprise. We shut down the economy. That leads to a 4.8% decline in GDP. It leads to 20.5 million job losses. But there was something I read earlier today that was really interesting. Goldman Sachs did some work on this, and what they said was, and we've kind of suggested this. We've kind of suggested that there are folks who have lost their jobs that will make more money on unemployment than they were making on their jobs. And what Goldman Sachs said was, in the second quarter and third quarter of this year, we're actually going to see increases in disposable income. And so disposable income is the income that people take out into the world and spend. And some folks that are, before the checks that everyone got and before the extra unemployment benefits were created, people had, an average of whatever, $1,000 a week in income, $2,500 a month or something like that in income average. And for Q2 and Q3, because of the federal stimulus, it's going to be that average plus, right? So we have additional disposable income for the second quarter and the third quarter. The challenge is we've got nowhere to spend it. We can't go out to restaurants. We can't go to sporting events. We can't. So we're going to have extra money that we could spend and nowhere to spend it, which means that'll carry over into Q3 and Q4 as things open up. People will have money to spend because of the federal stimulus. So the money that's been lost to job losses, to income, to actual income for work, has been largely made up for with the stimulus, which is a very interesting thing. We won't see it in the data for a while because we have to wait for things to open up, but then we will eventually see in the data. So let's talk about corporate profits. 423 companies in the S&P 500 have reported. That's about 90% of the market cap of the S&P 500. It looks like earnings are going to be about for the entire S&P 500 are going to be about $20.62. This is a earnings per share decline of about 45% year over year. So that's an enormous decline, but there's still earnings, right? There's still $20 in earnings in the second quarter. In the first quarter being reported now in the second quarter. Revenues and margins have dragged, obviously, on profits. Buybacks have provided just a very minimal contribution. The halt in economic activity in March is obviously the cause of the earnings slide. And then let's talk about inflation. Inflation is down pretty much across the board. Rates are down pretty much across the board. And the risk is the same risk we've been talking about since the very beginning. And I want to just touch really quickly on the green shoots that we started to talk about last week. The four categories are TSA checkpoints. They're still increasing. They're up a little higher than they were last week. Gross movie sales still haven't even begun to start. They're still 100% down. Change in, in-room dining or in-restaurant dining, they were off 100%, and now we've seen 2 weeks of gentle increases, which is a good thing. And we've actually seen hotel occupancy is up a little bit. So we're seeing some more travel. We're seeing people move about the cabin. At the same time, if you've watched any of the COVID, if you're watching the same graphs I'm watching, you're seeing those places that are opening up are beginning to see, and this includes South Korea, who they said did such a good job of shutting it down. They're actually seeing an uptick in cases. So it's likely we're going to see an uptick in cases. Everywhere that opens, you'll see more cases. I had a really long heart-to-heart conversation with my mom yesterday. They're in South Dakota, and they said, we just don't have a lot of it here. We just don't have a lot of it here. We just don't have a lot of it here. And I was like, Mom, just stay at home. Don't go out. It's spreading still. There's still people that have it. There's still people that are walking around. And if you've got 4, you've got 8. If you've got 8, you've got 16. It's just stay at home. Don't go out, because she has, she's got some heart issues and she's at risk. So I just want to make sure that everyone that's at risk stays safe. So that's kind of the overview of what's come in terms of economic numbers and of those green shoots that we're seeing in different places. And then there's the risk that we're always just expecting is going to be there until we have a vaccine. And again, we're actually expecting, if you remember this from last week, we're expecting that second quarter is actually going to be worse than the first quarter. The GDP numbers are going to be worse. I think we'll actually begin to see, and we've seen a reduction in the decline of employment every week. We look at weekly numbers. The 20.5 is the monthly number, but those weekly numbers have been less bad every week since that March 23rd, 22nd date that we had. And so I think we'll actually see some people, there's gonna be a lot more people that lose their jobs, but I think we'll start to see that flip. We'll see more people starting to work again than leaving their jobs in probably a couple, 3, maybe 4 weeks. So it's another green shoot we can look to is what happens to that unemployment, to the new unemployment numbers. Now, continuing unemployment numbers are going to stay very bad for quite a long time. But again, going back to what we just talked about, the federal stimulus makes up for that in the second and third quarters of this year. So if unemployment stays really, really bad through the third quarter and into the fourth quarter, more than likely we'll see another stimulus package. And we'll actually probably see another stimulus package even before then. Because we're filling the hole, and the federal government is going to fill the hole as long as they need to on this one. This is a pandemic. This isn't, we shut everything down. It's a suppression. It's a pandemic. So the federal government's going to fill the hole, and we're not going to worry about the cost in terms of, increased debt and increased interest payments for some time. But eventually that conversation will be coming, and we will have to start thinking about that and talking about that. Right now is not the time to do that, though. I asked right out of the gate, and I didn't get anyone to do this, but if someone would put a question into the Q&A bar, just so I know that it's working, that'd be fantastic. I do see that the person that I wanted to have join to hear this live answer, I got an email answer earlier today, and I answered it via email, but I also want to answer it here because it's very interesting. Every now and then, whether it's upwards or downwards, somebody makes a trade, and the trade they make is very smart, and people get lucky, 50%, I guess it's more like 40% of the time on this kind of stuff. But I got a question about a 2 times gold ETF. So I want to explain what these things are. And Scott did a little chuckle because he knows exactly what I'm talking about. So a leveraged, there's these things out there for stock indices, for commodities, for gold, for specific sectors. They cover everything. And what they are is they are leveraged. What that means is if it's 2x, that means if you put $1 in, they borrow an additional $1 and invest that for you. So a couple things comes out of that. The first thing is you amplify zigs and zags incredibly. So if you happen to buy something like this and it goes up, it's a trading vehicle. It will come down faster than it goes up. So it's just something to be aware of. If you know somebody that's buying these 2X, and there's 3X trading vehicles, and what a 3X means is you invest $1, that ETF buys $3 worth of the thing. So they're borrowing to buy. So the amplification is massive, which means when it turns around and goes negative, it goes very negative. And if you hold it too long, you're borrowing, right? So there's an automatic natural drag on the upswing and an increase of the negative because of the cost of the borrowing. So there's, these are trading vehicles. These are not holding vehicles. I would steer clear of them always. I would never touch these things. That's not to say I have never touched them. I would never touch them again. It's like once you get electrocuted, you don't touch the same thing again.
One way to talk about it real quick is if you were to do an S&P index in this genre, right, and the S&P went up 5 and you were 2 times, you'd be up 10, right? But if the S&P went down 5 and you were in a 3 times S&P, you'd be down 15, not down 5 that the S&P is actually down. All it's really doing is turning up the volatility, turning up the blood pressure, and it's feeding some dopamine, I think, for someone who likes to gamble. You can make lots and lots of money this way. You lose just as much, if not more. Not something we're ever going to play with or show our clients in a planning centric firm at all.
Yeah, this is for someone that's really, we call it market focused and performance driven. Right. And there's tons of research. You've heard me talk about it, ad nauseum all the time. You can be really lucky and you can do these things and make money on it. Most people don't, and no one does it consistently. It eventually eats us. The odds are always on the house in this stuff. We got a great question coming in. Is it your advice to defer taking your 2020 RMD to late in the year if you can afford to wait? Actually, they have said you don't even have to do it this year. So the advice is to not take the RMD in 2020 and to spend out of taxable assets if you can. And then 2021, we'll take the RMD then. Yeah, I think that's the best way to answer that. So I'm gonna click that one, done. David, I see that you're in. Oh, hold on. David, I just
unmuted myself.
Okay, great. I wanted to see if you wanted to add anything on this as well.
Well, my experience with an instrument like that was that I was in charge of a foundation endowment. This is maybe 20 years ago. And the manager of that endowment used one of these and lost a great deal of money. We eventually sued him successfully. So my recommendation is very much against instruments like that.
Sure.
Because the loss magnifies really quickly.
Yeah, and people have this thought that they can, I got in, it went up, I'll get out before it goes down. But it goes down. If it goes down really fast.
Yeah. Right.
You shouldn't really even hold these things for a whole session. You shouldn't even hold them for a whole day, a whole trading session.
Yep. Yeah, these are trading vehicles. If you hold this overnight and things gap down, right now the ones that are being looked at, and the question was about a gold miner, is gold mining one, and so that someone that bought that 3 weeks ago is up. It looks beautiful. They're very happy with it. But if we see a vaccine, or we see positive economic data, or we see, then what that means is that regular markets go up and gold and things go down, and that it'll go down really quickly. Scott, you were going to say something?
Yeah, I think we're being a little generous. Call them trading vehicles. I think we're sort of we're shining them up in a way. It's pure gambling.
Yeah,
it's pure gambling. I mean, and so if that's the agenda, then knock yourself out. But it's just not something, it's like when you invest in a company or a mutual fund, you invest generally for the long term. And over time, solid assets or at reasonable prices do very, very well. When you start putting a time horizon on something like that, and you've got to get the timing right, like options, or you've got to get when it goes up, it goes down 2-3 times as much. You create an environment where the deck is actually stacked very much against you.
Yeah.
So I think trading is a generous term. I think it's pure gambling.
Yeah.
Which is a really nice payoff if you're right. But Las Vegas and all those multi-billion-dollar operations aren't as widely successful as they are because they lose. I'm not a big fan.
Totally. So there was a big question. I'm just starting to think about this a little bit more, but I wanted to talk about it and I'm going to open this up to everybody here, Scott and David. Grain of salt. So we're going to have an election here, not too far away into the future, and there are the Electoral College, there's the Senate, there's the House of Representatives. These are all sort of in play. I wanted to talk about this very specific thing because we're in Berkeley. We have a belief here, but I want to talk about approval ratings before and after disaster, and I want to reflect on. Someone is asking a question here. Hold on. Oh, good.
Well, Sarah or we'll tee them up. We'll tee them up. If we have them.
It was in Slack, so it was not in this thing. I was just focusing on.
Okay.
So Donald Trump's approval rating from January 30th to April 27th has actually moved up 0.5%. So very, very, very lightly. George W. Bush, August 10th, 2001 to August 10th, 2001 to October 10th, 2001, his approval rating went up. I'm just trying to do some quick math here. Almost 34, a little bit over 34%.
Wow.
So what that is, it's saying, we actually know how much this has been botched. And the only people that are showing their approval are the people that you cannot shake from approving anyways. But everyone else, and this thing isn't going away. Like COVID is here. It's here through the election. So when we think about that, and all of these people think that this was a complete, mess up, botched job by the executive branch, I actually am heartened. I'm not going to be, overly heartened. I'm not going to predict anything, but I'm heartened that we haven't seen a huge upswing in support. It's just the people that we've always expected to support. And I might regret this, but I'm going to say, David, you have any thoughts on this?
Oh God.
You're going to regret it.
I already regret it.
Love you, man.
Especially
David.
after David's done, and then I chime in.
Okay, good. Go ahead, David.
So I don't think Trump's prospects are very good with regard to the election. This week is going to be quite important with regard to the Supreme Court because there are 3 cases regarding Trump's privacy claims that are going to be before the court. And my expectation, if the court sticks within the law, is that Trump is going to lose these 3 and his tax returns are going to become public. And I think that's only going to be a negative for him. If the court with his appointees were to rule otherwise, it will be a disastrous day for the American democracy. So I think it's something to be very watchful about, and we'll see what happens. Last week, the reversal by the Justice Department on the Flynn case is quite significant. If it were to actually occur, the judge does not have to agree with the Justice department, and I think the judge is unlikely to do so. Or if he does dismiss, if he dismisses without prejudice, the case can be brought again in the future. So these are very significant, things that are going on at the moment, separate from the whole coronavirus ineptitude. There was a great op-ed piece over the weekend in the Times by Timothy Egan, and his phrase for Trump was lethal ineptitude, and I think it's accurate.
Yeah. Thanks, David. John, you wanted to add on something?
Well, there was a very interesting article in the New Yorker about Greenwich, Connecticut, and the genteel Republicans of back then, old man Bush's father, Prescott, conservatism. The thing is, we don't know. We went into this election with a slam dunk, and we were shocked with the outcome. Right. And if you read that article, you'll in the New Yorker that's out right now, you'll see that there's a lot going on behind the scenes. There's a lot of thinking out there we don't know about, and I think the polls you get may not be accurate, because I think that all those people in Greenwich, Connecticut, if they're asked about Trump, they're just going to say, "Oh, yeah, he's horrible." But when it goes time to cast their ballot, that's another story. So we just don't know what's going to happen. We really don't.
Yeah, that's right. I think that's the most honest thing we can say is we can't know. We don't know. We can't know. Scott, you were going to add or no?
I'm gonna try and bring this all full circle from where we stand as a firm, and let's see if I can do this here. Let's see if this works. I just think all this talk is great. We like to always have the dialogue on what's happening, and I just think this slide speaks. Anyone who can see this who's on this call, we have no idea what's going to happen, and there's lots of polls. They're going to give all sorts of versions. I personally think, this is just me speaking, not even the firm, I personally think the days of like Tom Brokaw and like honest journalism and everyone really telling the truth to the best ability that they once could, those days have been long gone. And so all I can speak to is this. And this goes back literally almost 100 years. And for us and clients and over the long term that have plans and are thinking this way, the markets generally don't really care. We care because we have integrity and all these other things we have. But from an asset allocation perspective and long-term investors perspective, it's very clear that over long periods of time, getting caught up with who's in the office doesn't serve you well at all. And I just wanted to point that out here for those who could see this. I think this really speaks volumes. I think it was Jonathan who said earlier, maybe it was John Madden, this was actually supposed to be a 2-to-1 landslide the last election. So, I mean, to put faith in polls after something like that is really almost setting yourself up for disappointment once again. I just think we got to look at stuff like this and do the very best we could as individuals, parents, small business owners, do the right thing. But as far as the president's concerned, the chips are going to fall where they may. I feel really strongly about what this chart shows us, and that is we really got to just focus on the long term and hope for the best. And the rest is going to, like I said, the chips are going to fall where they may.
I do want to, rather than just talk, I want to just see if there are questions out there. And if there are, please pop them into that Q&A or into the chat. That way I'm talking specifically about, what some of your concerns are. And it's a good sign actually that we have 5 people instead of 30 people. That means people are starting to feel a little bit better. And go ahead.
Or 85 people at first.
Right. Well, the first one was, I think we were up over 100 the first time, and then we just sort of ticked down over time, which is it's a great thing. But you're here not just to hear me chatter, but if you have specific things or specific concerns. I read a whole bunch of stuff about the housing market in the last 2-3 days, and I got to tell you that no one thinks the housing market's going down. Like it is universal that the housing market's going to be fine through this. And I've gotten some questions from folks specifically about the housing market. Folks aren't quite, or analysts and strategists aren't quite as excited about commercial real estate. But the housing, they're like, we haven't, we did not build enough in the last decade. There is, still pent up demand, and we're going to keep pushing prices higher. And that's just, until we start building millions of more houses, we're going to keep housing prices are going to stay high. But in the commercial world, and we think about this in our office as well. And I've got a couple study groups that I'm part of, and we're all talking about this: is what does it look like to come back to the office? How necessary is it for us to have 3,500 square feet in the office? How long will it be for people to say, you know what, I'm comfortable coming into the office? Or how quick will it be for people to say, you know what, this Zoom call that we did was really easy. So why not just do this? It's time efficient. You don't have to drive down and find parking and take one elevator down in the parking garage and walk across through the parking garage and walk through that long hallway, find the elevator up to our offices. You don't get lost on the way. You don't have to do that. Like, we can do this on Zoom. Why not? And I think that most offices, whether you're a biotech firm or a financial firm, or you're going to think about those elements of your work that doesn't require an office. And you'll see maybe on the margin, less commercial real estate needed. And that would be interesting, because that's one of the things when you look about, downtown Berkeley and downtown Oakland and actually downtown San Francisco, when you think about how much building has happened in this space, and now to say, okay, we're not going to use it all, we could see price compression, which would be great for businesses, because this is one of the most expensive, the most expensive line item on a business's P&L is the people that they hire. The second most expensive line item is the space that they rent out. And that is more true here in the Bay Area than anywhere else. And it would be fantastic to see that price come down a little bit. Anyway, no open questions. David, do you have anything you want to add on either real estate or economic numbers? I think we've covered politics a little bit. Or John, do you have anything you want to add on those spaces?
No.
Well, go ahead, David.
No, go ahead, John.
At the onset of the call, Jonathan, you talked about, V-shaped recovery, U-shaped, what's it going to look like? I just want to bring it down to a local level. Yesterday was Mother's Day, as we all remember. And I rolled down Solano Avenue around 5:45. You would not have believed the amount of people that were out waiting outside of all the restaurants for to-go food.
Yep.
Fonda, Cugini, China Village, the list goes on.
Yep.
Lots and lots of people were out. So that was demand there, for sure. But it was takeout. If and when these restaurants do reopen, they're going to have to reopen in a certain kind of way with a certain kind of distancing. I think the demand is there, but the pressure of physical distancing is going to be there as well. So I think it's going to be more of my gut feeling, it's going to be more of a U-shaped just due to societal pressures, I think.
Yeah, for sure. I think that's, and Scott talks about this, for the last couple of weeks, you've mentioned the idea that someone's got to go first. And then we're going to see more pressure and there's going to be more desire to do these things. And John, we actually had, Caviar, Grubhub and Caviar and these kind of places. So we ordered from Fonda.
Oh, yeah.
Last night we had. Yeah.
Were you successful?
Oh, absolutely. We had a fantastic meal delivered for dinner last night. It was great. Fonda was awesome.
Because I ran into a client at Fonda, and we were talking, and then there are other people there, and there were about 4 Caviar or Uber Eats drivers, and I don't know what time you ordered, but there was a lot of frustration there. They were in the weeds.
What time were you there?
When I was talking to the client, I think it was around 6:15.
Yeah, we already got our food.
Oh, okay. Then you were smart. You did it early because there was there were a couple of guys out there getting stuff to bring home. And they were standing out there on the sidewalk. They said, oh, yeah, they told me it was going to be 20 minutes. I've been here an hour. So, but anyway, I'm glad it worked out for you.
Yeah, we got it.
There's a comment here in the Q&A, and it's just speaking to, in one of our early COVID Zoom calls, one of our recommendations was to explore rates for refinancing home mortgages. We followed your advice and we were able to get a very good new rate, et cetera, et cetera. And I just say to that, if there's someone on the call that hasn't looked into that, now is still a very good time. We have clients that are locking in 3% 30-year mortgages, give or take, and mid-twos 15-year mortgages, give or take. So in the spirit of rates, this is some of the very best pricing you're going to get on loans, maybe in your lifetime, is what it looks like. So certainly, congratulations on locking that in there. Great stuff. Thanks for letting us know. We always like hearing that stuff.
Yeah, an email this morning from a client saying that they went online and they found like I think it was 2.875 or something like that for a 30-year fix, which is it's amazing right now. They're going to save $700 a month on their mortgage for 25 years. That's real money. It adds up.
Oh yeah.
Oh yeah. Any other questions? Or will this be the shortest one of these we have? Happy to answer questions. Have nothing else really to present.
I just want to speak to something because we're kind of out in the middle of this and we're on the phone with lots of clients, and not just locally but throughout the country. I just want the folks on the call to understand that you may have colleagues, friends, family, neighbors that are talking about how bad this is and how bad that is. And I think that can feed on itself and lend to a downward spiral. I think some of the things to focus on are actually, one, what's different today than it was a month ago? And I think it's important to know that, Disney, which completely shut down on Earth completely, has reopened Shanghai Disney. Today was the first day they opened. They had tickets available, I think, over the weekend or Friday. They sold out in minutes. And now the instruction from the CEO of Disney is they're going to be adding an extra 5,000 to capacity every week going forward. So they're not anywhere near full capacity, but the point is the demand is really there. I don't think it's just in Berkeley or the Bay Area. It's all over. People just want to go back to doing what they did. And so Apple, I think, is 75% open in the next week or two in the US. Starbucks is about 90% open in the US. So I say this only because a month ago, this was not the case, right? So there's clearly very clear to me anyway, just speaking for me, a light at the end of the tunnel. And we're starting to see our way out of this. We have not recovered from fear to optimism just yet, but I don't think we're in 100% pure unadulterated fear anymore. I think we're really starting to head a little bit off of that. And I think that's really important, no matter what a neighbor or.
So Scott, let me just say that the lapse time between opening and the appearance of the impact of that on COVID cases tends to be about 2 weeks. And I think we haven't yet seen the full impact of the states that are opening. And I do have a sense that it's going to get worse again before it gets better.
Very
Because
possible.
without adequate testing and without the ability to isolate outbreaks and control them, we aren't going to be able to keep the curve down. And the United States is already, relative to the number of deaths here, way above deaths per million in any other country in the world. And so, and that's, I go back to Egan's phrase, lethal ineptitude. And I think that we're in for some worse stuff in the next month. So I just want to temper.
Worse how? Worse how?
I think we're going to see more cases again, and I think we're going to see states having to retreat from their opening as a result of that, because their health systems are going to be overwhelmed. And I think, whereas it began on the coasts, that this is now going to happen within the country, and it's going to be in difficult places. Like you look at Iowa, I think the Dakotas they have fewer hospitals in those areas, and they're going to be really overwhelmed.
So David, I think you missed the opening, but I talked about the idea that my mom is in South Dakota, and we had a very long talk. We talked for 2 hours yesterday, and part of the conversation was around what's happening there, are people opening up, and are people going out, and she kept coming back to this idea that you have to realize that when she goes to the grocery store, there aren't lines. When she goes to the park, it's not blankets. It's just not. There's just not that many people. So there is a natural social distancing that happens in a place like South Dakota, in a place like Iowa, in a place like North Dakota or Wyoming, or
even suburbs in New York. Even suburbs in New York, where my sister and they don't have the same city metropolitan feel.
No, I understand that, but there are these loci of outbreaks, like the meatpacking plants, that then completely spread that within the community. So it's not going to be all over those states, but there are going to be locations, and this virus spreads exponentially because of the number of asymptomatic cases where people are able to spread it before they know they even have something. And in some cases, they never know they had it, but they spread it nevertheless.
Yep. Yeah, I think it's wise to temper expectations, and we've seen South Korea's, and we talked about this a little bit earlier as well. South Korea is actually seeing an increase in cases, and they did really, really well to close it down. But there's definitely an increase in cases because we relax. We don't wear our masks. We were on a long hike yesterday, couple 2.5 hour hike over in Moraga, and almost everyone had masks, but there were a couple families that came walking through there that didn't have masks. And I don't understand why you wouldn't wear a mask at this point, this stage of the game. And there's some people that you'd meet them on the trail, and one or the other of you would get off the trail by 6 or 8 feet. And then some people just come walking right up to you. And you're just like, what are you doing? Like, there's no place to pass here. Let's, be careful. So yeah, a lot of it is we have to take some responsibility for ourselves. And we're in a state that, they're being very, very, very careful, but not every state is going to be that way for sure. So yeah, I think David, you're right. We're going to see an uptick in cases. I hope the uptick is, and every uptick is going to last weeks, because we see the uptick, but the way the data comes in, it's 2 days late.
Yeah.
And so there's already been infections. And so it's already spreading. But at the same time, and this is what we keep coming back to, there will be more cases, but at the same time, we're developing not just a vaccine, we're developing better treatments. And so we're figuring out some of that side. And so maybe the death rate goes down because of that. And so there's all kinds of stuff happening here. And for us, let's just be careful out there. Like let's keep the social distancing, just wear the masks. And we've, for those folks not in our office and are on the call, it's like, so let's say we go back to the office in June. Does that mean that we have clients in the office? Probably not. Probably not. We'll probably continue doing Zoom meetings for a number of months thereafter. And that's just, I think that's just smart. We just want to be safe and want to protect everybody, and so we're going to continue doing that.
Is Berkeley or the East Bay, in terms of regulation, is it required that in order to walk into a Walgreens, CVS, Whole Foods, you must have a mask on?
Yes.
Absolutely.
Not every store enforces it.
Because I know here in San Francisco, you can't walk in any of these places without one. And I think to David's point, the ramp up in cases, we're better prepared today than we were in the beginning because we weren't even told to wear masks day one, right? So as we re-enter society in a way, I went to Whole Foods yesterday with my wife. I'd been there in a long, long time. So the whole bulk section is done, right? Everything you want in bulk is already packaged individually for you. The salad bar is done. So there's a lot of ways in which I think consumers that are going about their business, going back into society, are going to be interacting with each other in a very different way than they were 60 days ago, which I think will help. But I think David's right. I mean, this isn't going to be some, straight line up back to reality. But I'm excited to see that we are heading towards a better tomorrow than we were 2 months ago.
You're also, you've got a situation where 40% of this country or something close to it is in denial about the actual, outbreak.
That's true.
I mean, there's a real problem, and you've got a government that's stifling its own Center for Disease Control and not allowing them to put out the information. So, we've got some serious problems. My daughter's in Tennessee, and I have a lot of concern about her because they've reopened there and they're like in la la land relative to the virus.
So in talking to your daughter, and so they've reopened, but is everyone going out and acting like nothing's happened?
Well, like her roommates, yeah, they went out to a bar. I mean,
What?
Yes. I told her, happily one of them is moving out later this month, but people are being reckless there. And, I think that is going to be explosive in 2 or 3 weeks. You're going to start to see a real uptick in cases in some states. So yeah, Nashville is not New York, but it is a city.
Yeah.
So.
Well, I think that, and there's really, again, we're sort of prognosticating a little bit, trying to figure out what's going to happen, and no one really knows. I think you're going to see pockets where you see flare-ups, and you'll see other places where you'll see, like California, where we say, no, we're not going to do this. I would not be entirely surprised, nor would I be, terribly disappointed if we said, you know what, June's not going to happen either. Because I think what we're going to learn as other states open up is we're going to see that, the infections are coming faster than we anticipated. And so maybe it's not June 1st, or maybe it's such a light opening that still restaurants, you can't go sit down in a restaurant. So we're going to see how we manage that. But I think to Scott's point, we're doing whatever governments do. Like, we know, those of us who are paying attention know, and we've read the numbers and we've seen the data on this, and we're not going to just go, willy nilly out there and get sick. Some of us will, it'll happen, but we're going to be careful. And I can't believe though there will be some, but I can't believe the number is 40%. 40% are going to support him no matter what. But half of those people are going to be like, you know what, just in case, I'm going to wear a mask. I'm going to keep my social distance. We know a lot more now than we did then. At least that's my hope.
And again, we're doing a lot of speculating and a lot of, like Jonathan's saying, prognosticating, because my dad's in Florida. I think the average age in Florida may be the highest out of any state in the Republic, in the Union, so to speak. I thought we'd see a lot more people passing away down there once it hit. And the truth is, we really haven't. And so it's hard to determine how this is going to all play out, right? I mean, 1,700 people have passed in a state where there's so much senior, older folks that have conditions and ailments and compromised immune systems, and they're just not seeing the rates of loss that I thought most people thought we would see. So there is obviously some real science here. I don't pretend to know any of it, but the fact of the matter is, there's a lot of states with a lot more people passing away than Florida, and you figured once it hit there, it would just spread like wildfire, and it isn't. So it's hard to guess this stuff, and we're all over the map. But I think you just got to be safe. You got to worry about your family and your friends, and we'll know a lot more in 60 days. I think, 60, 90 days. We'll see.
And in that 60, 90 days, there are 3 or 4 very good vaccine candidates. They're just candidates. We need to have more numbers of tests and human trials, all that kind of stuff. We're still a long ways from vaccine, but there are some very good candidates for that, and I keep reading up on that. The challenge, one of the things that they were talking about was that they didn't have enough. So the way it works is you either have to have a whole bunch of people in a trial for a month, or you need to have a fifth of that number of people for 6 months. And they can't create a very good trial with this. And so they're having a hard time getting the human trials to work so that we can have this. But so there's hiccups, but they're working on things. And none of this comes to an end until we have a good vaccine. But when we have a good vaccine, widely available, easily accessible, it comes to an end. And that, when you look at companies and stock prices and the way they invest in the future and what they're doing, that's what they're looking to. Is we're looking to, this will end at some point. It's going to be touch and go and changes and strange, and there's going to be inflection points of infections, and it's going to go up and down, and but at some point in the future there'll be a vaccine, and this will end. And that's I think that's 50 minutes. I think we can call it. I don't see any other open questions in the Q&A box, and we'll come back. We'll do this again next Monday, and if anything happens in the meantime, maybe we'll get some more questions. But everyone on the call, if something strikes you after the call, don't hesitate to send us an email, give us a phone call, and we'll use that we'll answer your question, and then we'll use it for fodder to begin next week's as well. Thanks, everybody.
Stay safe.
Bye-bye. Stay safe.